Hello traders, Corey Mitchell here with TradeThatSwing.com, and this video is on how to commit to trading decisions. Basically, how do we come up with those trading decisions? How do we stick to them so we're not overthinking while we're trading? How do we handle when we do start overthinking? And then basically a sort of review process where we don't just analyze the result, but we look at how would we score our decision making, how would we score our commitment. And this idea is based on something that actually came out of some golf, I don't want to call them golf psychology books, but basically golf psychology or golf performance books, where it's more about the mental game. And they have something they call a think box and a play box. And so I was out chipping the other day practicing, and I gave myself a really hard chip. And so the idea of this is that we think through our decision. So when you're stepping up to a golf shot or you're stepping up to potentially take a trade, you're analyzing the pros and cons of that trade. If it's a golf shot, you're thinking about, okay, where do I have to land the ball? What kind of swing do I have to put on the ball to get it to that spot where I want to land it? How far is it going to roll after that? So I had this delicate little chip, and so I'm going through the process, and a shot like that that's very delicate or hard to pull off, we need to be fully committed to it when we decide that this is what we're going to do. If we decide, okay, we're going to hit this kind of shot, and then we get over the ball and we start second guessing ourselves, how do you think that result's going to go? Probably not very good, because you haven't committed to that decision. You have indecision, you probably have tension in your body, you feel under a lot of pressure. Whereas if you think through what kind of shot you're going to hit and then you fully commit to it and just get up, do it. Trades last a little while, but it's still the same process where we want to go through this trading decision or think box. So even if we're day trading or scalping, it's like, and we might have our strategy, and most people think like the strategy takes the thinking out of it. No, unless your strategy is absolutely completely automated, every single part of it, then maybe you don't have to think about much. But if there's any sort of pattern recognition, or you take conditions into account or something like that, we have to think through the trade. We want to have almost like a checklist of things we go through, just like a golfer would look at their lie. Are they in the fairway or the rough? How's that going to affect the ball flight? Do they have to carry it over a bunker or over water? Or how's the wind going to affect it? How are they playing today? And that's going to affect our trading decisions too. How are we feeling today? Maybe if we're a little anxious, maybe we use a trailing stop loss instead of a profit target. We come to a trading decision. we think of the best trade we can make based on who we are and the information we have right now. And that's basically our think box. Then once we step into that play box, that means we are fully committed to the decision we've made. If we're not fully committed, back off and get committed. Why aren't you committed? What's wrong with the decision or the trade or the shot that you've decided to hit? Maybe you just need a little bit more, maybe you just need to reaffirm it, or maybe you need to reassess. Maybe your subconscious is telling you like, hey, something's really wrong here, or you are kind of going against your strategy and you're fighting it, and something in your body is kind of, or your mind saying, hey, something's not quite right here. Take a second, and you're trying to force it through. Don't force the commitment, in the sense that if you feel you've made a good decision, then you want to commit to it. If the commitment part is lacking, and that could be a sign that, hey, maybe you haven't really thought through this decision. And in that case, lack of commitment's good. You back off, you reassess. So every trade you take, I want you to think about, is this a good trade? Your own little checklist. My checklist, people always want to know like what my checklist is, but it's not going to help you. Sure, there maybe are some technical things, but there's a lot that goes into a trade. Every single trade is unique, even if you're following a strategy. They might look somewhat similar, but no two rounded tops or rounded bottoms or TCs or any other patterns I trade, contractions are exactly the same, with the exact same context, with the exact same market conditions. It's always a little bit different. So I want to think through each trade, decide, hey, is this the best trade I can make? And then if it is, I commit to it. If I can't commit to it, I back off. Finally, we have the review box. Oh, wait, let's step back for a second. The think box and the play box. I would like you to score how, on a scale of 1 to 5. This is not based on results. This is, you could do this basically in real time without knowing the result. How is your decision process? Did you actually think the trade through, or was it just an impulsive, no thought? It's just kind of the price was starting to spike up and you didn't want to miss it, so you jumped in. No real thought process whatsoever. That would be a 0. If you did think through the trade, if you looked at, okay, well, the price could come down here. If I get a TC in this area or a rounded bottom, that would be a good trade. So it's not just about seeing the pattern. Maybe it's about like, where is that pattern in the chart? Was there a huge drop before it? Was there a little drop before it? Those things might affect how your decisions end up playing out, which we'll get to in a second in the review box. But just, did you think through the trade? Was it the best trade you could have made based on the information you had at that time? Again, not based on results, just based on, did you think it was a good trade? Yes or no? 5, 1, maybe it was a little bit in the middle, maybe you did a little bit of thinking, then maybe you're at a 3. How was your commitment? If you started doubting that trade the second you got into it, your commitment's low. That'd be 0, 1. If you maybe tweak something little, maybe you're at like a 2 or 3. If you stuck to that trade, that does not mean stuck to the result. It means you, in your trading decision, you looked at whether price is going to go down, what are you going to do? Price goes up, what are you going to do? Your commitment to both of those, what did that look like? Did you fully commit to that trade? Did you execute it when you were supposed to? Did you get out when you were supposed to? How committed were you? And I bring up the commitment to result because people think sometimes that being committed to a trade is sticking to what you want to happen. So if you buy a stock and you think it's going to go up to here, they think commitment means your only exit is up here. So even as it tanks, you're really committed. Diamond hands, hodl kind of idea. So it's tanking and you're committed to your profit target up here. Well, good on commitment, that's a 5, but your trading decision or think box was horrible. You did not consider that the price could go down or up. So maybe that's not a great decision. You didn't consider the variables. So some of these things will come up in your review box. If you bought that trade expecting it to go up and all of a sudden you're looking at a horrific loss, maybe that's something you want to consider changing in the future. So trading decisions can only ever be based on the information we have at the time. What is this a good trade based on the information I have and who I am right now? Am I committed to it? So the review box is not only looking at results, but also scoring these. So, in real time, you could judge your trading decision. It'd be more after the trade. You could look at, was I committed to that trade or not? And then review is looking at that, because then results take on a different light. Maybe the result would have been good. your trading decision was good, but your commitment was bad. The price went where you wanted, but you bailed on it right away. So we want to consider these as well as the results. And then, so you might be taking what you think are good trading decisions in the moment. You're committed to them, you're sticking to them, but you just keep losing. Then we have to adapt that information. We have to look at the charts. We have to look at the data we've been using for making trading decisions and decide, okay, like, there's probably a better way of doing things. I keep losing even though I'm making great trading decisions. Then we'll have to maybe update our strategy, or look at, if you're always getting stopped out, then you're either entering too late in the trend, or you're entering too early into a new trend, or the price is wiggling around too much, so you might need a little bit more patience on the entry. Push it back a little bit. That first kind of instinct you have to get in, maybe that's not the right one. Or, the first trigger, maybe wait for a better set of signals, or some better conditions to trade in. If you have, so that was more if, you're making good decisions and good commitment, but your results suck. The opposite could happen, where you have the trades are moving where you expect, but you are not taking advantage of it. So either there's some problem in here, and people often think of the results, like they'll switch strategies thinking, well, if I have a different strategy, I'll get better results. But their problem is up here, right? It's not in the results per se. If price is generally, it's not going to be 100%, but fairly often doing what you want, 50% of the time with a good risk reward is going to give you a phenomenal return. So, even if you're right 50% of the time, that should be more than enough to do well at trading. So if we're not capitalizing that could be a commitment issue. It could be trading decisions are probably okay if, the price is doing what you want, but there's a problem in here with commitment. Trading decision problems could be, impulsive trades, or you're holding on to huge losses. You haven't considered your upside and your downside, basically kind of pros and cons of a trade. You haven't said how are you going to get out of a profitable trade? How are you going to get out of a losing trade? So your indecision, or your decision box, your think box is not fully formed. So you can do a little checklist on this. How do we become more committed? Well, it's just going to take practice. Same with the decisions. We have to start thinking through our trades. If you're used to just taking impulsive whim type trades and it's not working for you, you might want to start looking. There's those little risk reward tools on lots of charts, or even you could just draw a little trend line. And, as the price is moving, look at the chart and say, if this starts pulling back, where would I want to see a pattern develop to go long? And then you can start to think ahead, look at what the conditions are like. So build that little checklist of things that you want to see in your trades, and avoid taking trades until you've gone through a decision process. And it's going to take time. Maybe you'll miss some trades because you're not used to making decisions. So you go to take a trade and you think, oh man, I'm supposed to think it through. So you go through your checklist, trade's gone, whatever. It doesn't matter. There'll be many more trading opportunities. Build the skill set, build that process of committing to making a trading decision, and then committing to that decision. And then once the trade's over, reviewing these, and then looking at what the price action or the data you were looking at could potentially help you improve your results overall. This will help you zero in on where potential problems lie, because it might not be your strategy at all, but you keep blaming the strategy, but it could just be commitment. It could be poor decision making. So I like this. Think box, play box, review box. Structure your trading that way, and hopefully that helps you improve. I did write a big article with some more examples and stuff on this topic. So you can check that out in the links below the video. Please like and subscribe, and you can visit me at tradethatswing.com. Lots of articles as well as full trading courses on stocks, forex, swing trading, and day trading. Happy trading out there.